Hey everybody, what's happening? Son of a silver stacker here. In today's numismatic news and information for the 19th day of September 2022, I'd like to welcome you over to Good Morning to You with Tiny Numismatics number 236. Hope to see you there 9:30 a.m. this morning Eastern, 6:30 a.m. Pacific for your early birds out there. Now let's head over here to those spot prices. Let me reload this. Gold is down $11.90 to $16.7340. Silver's down a nickel to $19.61. Platinum up $5.30 to $9.2730. Platinum or palladium was up $12.80 to $21.6050. Gosh, that's incredible. Now we have some big news coming out this week. It says here next week's major U.S. economic reports and Fed speakers. And I'm on MarketWatch.com, and I don't know why it says next week because today is the 19th. And it says Monday, September 19th, the Home Builders Index. But really, let's talk about what's going on here. On Wednesday, September 21st, the Federal Reserve makes a statement at 2 p.m., all right? And the Fed Chair, Jerome Powell, has a news conference where they're probably going to be talking about raising interest rates the highest percentage in over 40 years. That's incredible. And what do you think that might do to the precious metals market? Well, we've already kind of seen a little bit when they've actually increased rates, right? So gold and silver, they've taken a hit, correct? Yeah, because it says here, what happens to, now I'm on the Google machine now, just so you know, what happens to gold prices when interest rates go up? Now, this is just a general statement. I think it can go either way, depending on certain circumstances. But I think generally speaking is what they're saying here over here at investingnews.com. When will silver go up? Now, it says here, what happens to silver when interest rates go up? Rate hikes are generally negative for physical silver and gold prices. That's because when rates are higher, it's more profitable to invest in products that can accrue interest. Now, isn't that interesting? Higher rates, higher payments of interest. Okay, yeah, maybe. But what if you couple that with inflation? Will those higher rates get you that nice fat payout? I don't know. There's a lot of stuff going on here. Now let's go here. This is silver price history, and it's 2022. If we go back 40 years, that puts us at 1982. Okay, that was the year before I think the Return of the Jedi. So here we go, 1982. We were at $5.88 an ounce. And that was Thursday, June 10th. That was the lowest I could find. Now, not sure when they raised rates, but look at this. In the latter half of 1982, you can clearly see by February of 1983, silver is at $14.60 for a U.S. dollar per ounce. Now, that's not tripled because it would have been, above $16 from $5.88. But clearly, you can tell that the trajectory was definitely upwards. Now, look at that. That's really where things really happened, as on that Monday, the 4th of February, 1980. And really that window, I mean, it happened. It so quickly closes. It's just incredible. I mean, anyway, getting back to my story here, 1982, 40 years ago, it looks like, and inflation was pretty high at this point here, okay? It looks like the Federal Reserve lowered interest rates as silver reacted in the next 6-7 months, okay? But from then on, look at that. It took about 3 years for it to get back down to $5.88 in 1985. All right, and imagine when interest rates got lower again. So that's interesting, but this all ties in, okay, to, guess what? Yeah, currency debasement. What is currency debasement? Well, I'm glad you asked. Now, this is under economics and macroeconomics, and it's by Clay Halton, updated August 27, 2001, reviewed by Michael J. Boyle. Not sure what that means, maybe peer-reviewed. What is debasement? Now, this is, I've highlighted the ones that are going to be more, I guess, related to our topic here today, but I just want to get the general idea. Now, what is debasement? Debasement refers to lowering the value of a currency. It is primarily associated with coins from precious metals, such as gold and silver. A currency is debased when the coins are made with a mix of precious metals and base metals, as opposed to purely precious metals. The more base metals are added to a coin compared to precious metals, the further a currency is debased. And can you think of a time when that happened in the United States? Yeah, in the 1960s, okay? So we had 90% silver in our coins, and then after that, well, the United States government took that silver out of it. Gone. And you can find some of that silver here and there when you do coin roll hunts from customer wrapped rolls from the bank. And those are kind of fun when you find silver. It's kind of like hitting a treasure or hitting the lottery. It's kind of cool because they're that rare And as time goes on and more people do coin runs, they're going to become even more rare because that's called something, it's Grisham's Law. All right. And Grisham Law states that more valuable money will be taken out of the system, and the lesser valuable money with the debased metals will be left in the system. So imagine how much money is currently going around in circulation now. All right. And how much of that money, that 90% constitutional silver, is sitting in people's houses, okay, or in a dealer's vault or somewhere of that nature. You understand what I'm saying? So really, those have been taken out because they are valuable. Well, that's currency debasement. But how does it relate to us here with an inflationary environment? Because really, they've taken that silver out a long time ago, over 50, 60 years ago now almost, all right? Now, these are the key takeaways from the Investopedia article. Now, debasement refers to lowering the value of currency. Absolutely. Debasement is traditionally associated with mixing base metals into currencies that are made with precious metals such as gold and silver, and it lowers their value, right? Their intrinsic value, right? Now, today, debasement can happen if a government prints more money, increasing the money supply without corresponding increase in output. Ouch. Yeah. And it gets better from there, or worse, depending on your point of view. Debasement gives more money out to governments for spending while it results in inflations for citizens. And some people think that's a tax on the citizens because they get less money to spend on their day-to-day living costs, right? So we know that if inflation goes up, people are going to be spending more money on energy costs. They're going to be spending more money on, and when I mean energy, I mean the heating fuel to heat their home, natural gas, petrol, the gasoline, food. Okay, so lots of stuff going on there. Now, debasement is primarily associated with periods before there were regulatory standards and guidelines for making money. Yeah, but are we in that area where we have regulatory standards and guidelines for making money? Yes, absolutely. Then why are we in this position? I don't know. Can't make sense of it. Right? Yeah, I'm saying. Now, understanding debasement. Here we go. I've highlighted the important parts here. Now, it says, though gold and silver coins aren't commonly used today, debasement can still occur if a government prints too much money. And I would imagine the people that are in charge know about these axioms, these rules, the way this stuff goes down. Debasement can still occur if a government prints too much money, increasing the money supply. Yeah, hello, that's pretty simple. This also leads to inflation as there is more money, but not an equal increase in output. Now, why debasement? I've gone down here. I'm going to read the whole thing, actually. That's probably why it's highlighted just that one. Debasement has been common throughout history. In ancient times, governments would debase their currency by adding lower value metal to the gold or silver content of the coins by mixing the precious metals with a lower quality metal. They were able to create additional coins of the same denomination, essentially expanding the money supply, but for a fraction of the cost. Now, by debasing their currencies, governments believe they can meet their financial obligations more easily or have more money to spend on infrastructure or domestic spending or whatever it is they're going to be spending money on, right? It could be war, it could be anything. Now, such methods, however, eventually lead to a crash. What? Now, who would have thought? I imagine the people in charge would have known that. Debasement was a popular method of funding wars. What? There it is. Governments, in effect, created more money without having to increase taxes to fund their conflicts. That way the people wouldn't know and they wouldn't speak out about it. All of these maneuvers are short-sighted, of course, as debasement holds negative consequences for the citizenry, primary in the form of inflation, which is basically higher taxes. Your money needs to go, you need to spend more money to get the same product. Now it says here, real world examples, and this is the end of the article, and I'll keep it short. It says here, Roman Emperor Nero began debasing Roman currency around 600 AD by reducing its silver content from 100% to 90%. Over the next 150 years, the silver content was reduced to 50%. By 265 AD, the silver content was down to 5%. Gosh, what's going on over there? Can really tell you. And you know what happened to the Romans by 260. I mean, come on, we all know. Now, when a currency is debased and therefore loses value, sooner or later, the citizenry catches on and begins demanding higher prices for the goods they sell or more wages for their work, resulting in inflation. Yeah, we're there now. People are asking for more, like minimum wage, $15, right? Also, people are looking at, retails, outlets, they aren't necessarily demanding more money, but they're doing that thing called shrinkflation, where they're giving you less product for the same amount, right? That's a rough one too. Now, in the case of Roman Empire, the debasement produced an annual inflation of around 1,000%. And what do you think we're at if we included energy and food costs into our inflationary numbers? That would be interesting if they put that back in. Now, today, most currencies are fiat currencies, meaning, well, they're not based on a precious metal, meaning the good faith. It's all faith-based. So debasement only requires that government print more money, or since much money exists only in digital accounts, they can create more electronically with a flip of a switch or the stroke of a keystroke right there. Wow, it's incredible. Now, this is probably the one that's going to hit home most, or at least probably should hit home most to everybody. And it's obvious to me what I'm looking at here, and I'm just gonna read it and let you all figure it out on your own here. It says here, Germany, in the early 1920s, the government reduced the value of the mark, that's what they call their dollar, from around 8 per US dollar to 184 per US dollar by printing money to meet its financial obligations. Now, we know in the 1920s, there was a roaring 20s, but we know by 1929, well, the stock market crashed. Right, just a little bit of historical perspective. Now, by 1922, the mark had depreciated to 7,350 per US dollar. That is incredible. What an exchange rate. Now, it eventually collapsed, reaching 4.2 trillion marks per US dollar before Germany had to return to the gold standard. And do you remember those pictures of people heating their homes with marks? Yeah, that's what people did because their money was worthless. And that's not what we want, right? Now, let's go to those plus ones today. Now, people always ask me how I sneak chocolate into the cinema. Well, I've got a few Twix up my sleeve. Now, over here, bam, Proverbs 1:12. That's 11:12. Whoever belittles his neighbors lacks sense, but a man of understanding keeps his mouth shut. Now, over here to KOI and Coin News Radio 95.9. This is the Red Hot Chili Peppers, the Zephyr song. Yeah, this is good stuff. Fly away. Now, this is it. I want to thank you all for watching. Hope to see you here this morning with me and Tiny. I don't know who else is going to come in, but we'll see. Maybe we got a special guest today. So I want to thank you all for watching. Thanks for dropping by. Don't forget to hit that like button. And if you do like what you're hearing, please subscribe to the channel. It's free. Son of a Silver Stacker, out.